Risky, volatile, and unpredictable. These are some terms often used to define the stock market, a place where people buy and sell stocks of publicly traded companies. While investing in the stock market can be lucrative, it comes with various risks. One of them is the time it takes to complete a transaction in the stock market. On average, a stock market transaction takes at least 3 days to complete, and this has been a legacy issue for stock markets the world over. Now, India has taken the first step to change this. On March 28th, the stock markets in India created history. BSE, or the erstwhile Bombay Stock Exchange, and NSE, or the National Stock Exchange, rolled out a new system. They became the world's first to introduce a single-day trade settlement cycle. But what is a trade settlement cycle, and why is this a big deal? To understand that, let's first look at how stock market transactions work. Shares of publicly listed companies are traded on different stock exchanges around the world, such as the New York Stock Exchange in the US or the BSE in India. An investor first places the order for shares via a stockbroker or an online trading app. The order is then transferred to a stock exchange where it's matched with stocks being sold by other investors. Once the order is matched, the stock is credited to the buyer's account, while the money is transferred to the seller's account. And following the money transfer, the trade is considered complete. This process is known as the trade settlement cycle. Earlier, it used to take multiple days to complete this cycle. Stock exchanges use terms like T+1, T+2, T+3 and so on to denote the number of days it takes to complete a trade. Here, T stands for the day a trade order is placed, and the numerical part represents the number of extra days it may take to complete the transaction. For example, if a stock exchange uses the T+2 trade settlement cycle, it will take at least 3 days to complete a share transaction. 1 day for the order and 2 more days for the transfer process. Now, under India's new process, the trade settlement cycle will be completed in just 1 day. This cycle is also known as T+0 settlement, where T stands for the day the trade order is placed and 0 signifies that it won't take any additional days to settle the cycle. As of now, most stock markets worldwide operate on a T+2 settlement cycle, meaning once an order is placed, it takes 3 days to complete the transaction. But India has always been at the forefront of resolving this issue. Indian authorities have gradually decreased the trading time frame. Before 2001, it used to take over 6 days to trade a share in India. In 2003, this was reduced to 3 days. In 2021, the Securities and Exchange Board of India, or SEBI, which is the country's stock market regulator, introduced a T+1 or a 2-day settlement cycle. This was introduced for a few shares on a trial basis, and from January 2023, this was applied for all the trading stocks. India was the first country in the world to do this, and now India again leads the world in rolling out same-day settlement cycle.
Over the last 4 or 5 years, a large number of changes that have been brought about by SEBI. The number of regulations that we have brought into this space is fairly large. Now look what has happened. The market is just blooming and growing because it's now built on such solid foundations. The investor has faith in the ecosystem. The regulator has faith in the ecosystem. Systemic risk has been largely eliminated.
The process is currently being tested. 25 shares have been allowed to trade on the single-day settlement cycle, that too on an optional basis. This means that the investor has the option to pick the cycle favorable to them. They can either choose to trade using the new single-day settlement cycle or continue using the existing 2-day settlement. The company shares that are allowed to trade under the new format include Nestlé India, Tata Communications, Cipla, Bajaj Auto and more. After the 6-month test phase, SEBI is expected to assess the feedback from market participants and decide on the next phase of implementation of the cycle. Meanwhile, around the world, most countries still use a 3-day settlement cycle. This includes the US, the UK and the European Union. The US is planning to shift to a 2-day settlement cycle on May 28th this year. The European Union, on the other hand, is still observing the impact of shorter trading timelines. In China, stock exchanges offer a mixed settlement cycle, where the share is transferred on the day of the trade. However, the money settlement takes 2 days. Market analysts believe that a shorter time frame for the transactions will help smaller traders. In the current scenario, the stock transfer process takes a long time. During this, investors have to wait to settle their balances. This creates a liquidity shortage for them, especially those who trade with small capital. Hence, a shorter settlement cycle is expected to allow small investors to avail of funds in a single day. Investment returns on the stock market of a country often reflect its economic growth. While the world is facing a risk of economic slowdown, India has consistently reported better than expected growth, and that has boosted its stock market returns. Last year, Indian stock exchanges provided better returns compared to the US and China. Meanwhile, the number of market participants has also been rising in India. And now, by reducing the trade settlement cycle to a single day, it's looking forward to exponential growth. India is already one of the top performers among emerging markets, and this new system will further propel its position in the global economy.
From impeachments to inaugurations, if it's a political story, we are on the scene. The race for the White House is heating up.
We're beating Biden.
How dare he say that?
If it's breaking news, we're live with the latest coverage. From the White House, the State Department, and Capitol Hill, we know the issues, but above all, we know the players to bring you the latest in-depth analysis on all the key stories that we're covering. I'm Eric Ham. Join me from Washington here on First Post America.